Hey everyone, welcome back to Corporate Dakota, the place where we untangle the complex web of corporate filings and find the hidden gems, or sometimes the not so hidden red flags. Today we're diving into Dakota Gold Corp, its latest report, and let me tell you, to ease a bit of a musical chair situation happening with their accountants that has caught our eye. This is a current report, meaning something significant has just happened. Think of it like a company's urgent bulletin to the world. It's filed when important events occur that shareholders and the market should know about right away. The main event we're looking at happened on the 18th of November 2025. Now, what exactly went down that prompted this quick filing? Well, it's all about their accounting team. Dakota Gold Corp has decided to switch their main accountants. This is a pretty big deal for any company. Your independent auditor is like the referee who makes sure the financial numbers are fair and accurate. When a company changes auditors, it can sometimes signal a shift in strategy or a desire for a fresh perspective. So, here is the scoop. The company's audit committee, which is a group on the board responsible for overseeing financial reporting, has made a decision. They've completed a review, a competitive selection process they call it, and have appointed Deloitte and Touch LLP, or Deloitte as well call them, to take over as their new independent auditors for the rest of 2025. At the same time, they've let go of their previous auditors, Ernst & Young LLP, or A. This change is effective immediately. Think of it like changing doctors. Sometimes it's to get a second opinion. Sometimes it's because you're not happy with the current one, or sometimes it is just a natural progression. Now, here is a crucial part to understand when a company switches accountants, especially if the change isn't smooth. There are often disclosures about why. The report here explicitly states that EI's reports on Dakota Gold's financial results for the past 2 years, 2024 and 2023, were clean. That means EI didn't find any major problems, express any doubts, or qualify their opinions in any way. This is important because it suggests the departure from EI wasn't due to any discovered accounting scandals or major financial red flags in their past audits. And it goes further. The report states clearly that between the company and I, there were no disagreements on how to account for things, how to present financial information, or how the audits were conducted. If there had been any such disagreements that I felt were serious enough, they would have mentioned them, and that could be a big warning sign. The fact that there weren't any according to this filing is a positive sign, suggesting a relatively amicable parting of ways. As part of the process, the company has shared this very report with EI and asked them to send a letter to the Securities and Exchange Commission, the SEC, saying whether they agree with everything Dakota Gold is saying about their time together. This letter is also filed as an exhibit, which is like an appendix to this report. It is a way to ensure that both sides are on the same page, or at least that AI has had a chance to confirm or deny the company's account of events. Now, what about the new guys, Deloitte? The report also clarifies something important here. It states that going back through the last 2 fiscal years and up to the present, Dakota Gold Corp did not consult with Deloitte on any tricky accounting questions or potential audit opinions before deciding to hire them. They also didn't get any advice from Deloitte that heavily influenced their decision making on accounting or auditing matters. And crucially, there were no disagreements or specific reportable issues with Deloitte that would typically be disclosed in this situation. This typically means the switch is less about seeking advice on past issues and more about a fresh start or a preference for a different auditing firm. This exhibit number refers to that letter from I that we just talked about. It's dated the 21st of November, just a few days after the report was filed, which is pretty quick work to confirm or comment on the statements made here. Dakota Gold Corp has common stock, which is the basic ownership stake in a company. This stock has a very small par value of $0.001 per S-share. Par value is essentially a nominal value assigned to stock upon issuance. It's often very low and doesn't reflect the actual market value of the stock. The ticker symbol for their common stock is DC. This is what you'll see on stock market tickers. Their stock is traded on the NYSE American, which is an exchange for smaller and mid-sized companies. They also have warrants, which are like options. These DC warrants give the holder the right to buy 1 share of Dakota Gold's common stock at a specific price, which is $2.08. The ticker symbol for these warrants is DCWS. These warrants are also traded on the NYSE American. Dakota Gold has checked the box indicating they are an emerging growth company. This classification comes with certain benefits, like being allowed to delay adopting new accounting standards. It suggests they are a relatively young or smaller company still navigating its growth phase. Looking at this filing, the main story is the change in auditors. It's a significant decision for a public company as it impacts trust and transparency. The fact that the report states there were no disagreements with EI and that the change was made after a competitive selection process suggests that this isn't a sign of immediate trouble. but rather a strategic move by the company's leadership. It could be about finding an auditor with specific expertise that Deloitte might have, or perhaps a desire for a fresh independent review of their financial health. It does make you wonder what prompts such a competitive process and a switch. While the lack of reported disagreements is reassuring, any change in auditing firms warrants a closer look from investors to understand the underlying reasons and ensure financial integrity remains paramount. The company seems to be signaling a move towards a potentially new phase, and having a trusted auditor is key to building investor confidence. What this means long-term for Dakota Gold Corp will depend on their future performance and how this relationship with Deloitte evolves. Alright, that is our breakdown of Dakota Gold Corp's latest filing. What is your take on this auditor switch and what it might signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And of course, subscribe for more insights from the world of corporate finance. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next one.